10-year note yields end the day lower, but it's been a bit of a roller coaster ride for yields here. Yesterday, we saw 10-year note yields get as high as 325. Today, they were as low as 308. So we're not seeing a push higher and then a move continuing higher. We are seeing moves higher one day and lower the next. That's what happened today. A couple things hit the tape today. The Fed chair was speaking on a panel, on an ECB panel with the ECB president and the Bank of England governor. At this point, he was talking about inflation and growth and a little more honest, a little more revealing than we're used to hearing him when he talks at press conferences at Fed meetings or at other events. It talks about the uncertainty of inflation. Recall when the Fed chair talked about inflation being temporary and transitory and then admitted that maybe it's here for a little bit longer. Now he's kind of shaking his head. He gave in testimony today that he's not really sure where it's going. Likewise, they're concerned about how the Fed rate hikes will affect growth. And there's sort of a hopeful tone from the Fed chair today, but clearly there's still a lot of uncertainty. And to hear him talk like that gave the market a little bit of concern. We saw yields move from the highs down to the lows, and that's where they ended the day. Again, just below 310 in the 10-year note yield. Now, what does this all mean for volatility? Well, if you check out that CVOL index over at cmegroup.com, you'll notice that volatility remains directional with yields. Yields go down, we see volatility go down, and that's exactly what happened today. Volatility is significantly lower than it was a couple weeks ago, even just prior to the Fed meeting. So ultimately, we see volatility moving lower after the event and as yields continue to creep lower as well. Lastly, let's talk about what we have tomorrow. Well, we have the claims number, our in the moment look at the job market, and that is expected to remain elevated. The claims number coming in north of 225 last week likely will happen again tomorrow. We also get the PCE data, which is the Fed's favorite inflation gauge, but we already know that inflation's high. We will also get the Chicago Purchasing Managers Report. That has been kind of trickling lower here, so that is going to be a concern. It remains above 50. That is the key level for the Purchasing Managers Report, but we continue to creep lower, get closer to that 50 mark. That growth number that we just talked about will become more of a reality, and that's something the Fed does not want. So midweek, 10-year note yields hovering still above 3%, getting down to as low as 308 today, well off yesterday's highs ahead of claims, PCE, and Chicago Purchasing Managers on Thursday.